It's true, folks. I am back. Give me a sound check here, make sure everything's working. Perfect. Welcome everyone. I am back, and make sure you subscribe and like these videos. I'm going to make a new deal with you folks. I'm going to do a video as long as I get 1,000 likes. If I get less than 1,000 likes, then maybe I think I'm not going to do a video. So you guys got to pay me at least 1,000 likes. We should get a couple thousand. So I've been gone all this time. So let's get this whole show rolling again. And there's a lot to talk about tonight, so I'll be going through a lot of details about Jackson Hole and the work. So let's just kind of take a quick look back on last week before we get into this week. And even though I was gone, there was a fair amount going on. We saw a little bit of a retracement, a little bit of a rejection. I had forecasted 43.20. We printed 43.27, I believe, on the futures the other day, and we got a decent rejection off of there. And I'm just going to tell you that you're going to be a bit surprised, because there's still, I believe, at least another retest of that level and the potential of actually printing above the 200-day moving average. So don't get too bearish just yet. And I think where we're trading, you'll see it when I go through the technicals, there's some very interesting levels setting up here, and there's great metrics still behind this rally that we've been watching for the past several weeks. So don't listen to too many folks out there trying to get you bearish and all that. But let's take a look back. Last week, S&P was down 1.2, NASDAQ down 2.6, Russell down 2.9. 8 of 11 sectors were negative. So it was definitely an off week. It was the first week down for a while, I believe in 5 weeks. And, you know, what did we see last week? The same thing I was talking about before I left. And it feels like it's almost like time has been frozen. I'm looking at Bitcoin's the same price. Everything's kind of back to where it was almost before I left. So the market reset back to where I was. So, but housing is weaker, just like I've been talking about. That's going to be continuing. That story, as you see, when we get into the economics coming out this coming week, there's more of that stuff coming out on the housing. You know, we saw existing sales down 5.9%, and retail sales also showed some slowing. It was flat month over month, but we're seeing a lot of these retailers come out and starting to struggle a little bit. And just remember, the market is not the economy, and the economy is not the market. So there's going to be some divergences that are going to happen in this particular scenario, especially from where we've been and some of the things that I think will happen when I talk about Jackson Hole here in a minute. I've got some interesting thoughts on that I just put together. So let's take a look at so this is the one number, and many of you know I was in Europe and beyond actually last week, and Germany's PPI came in at plus 30. I had to read this 3 times. 37.2. That was a crazy number, and you know I would tell you that that's probably not sustainable. That would be a disaster to say the least. And I think Europe's got a lot of really interesting things they're going to have to deal with. Of course, everybody's set up for nat gas and all kinds of craziness. So we've got a lot ahead of us. Certainly, I'm not at the moment, not a bull from the standpoint of looking at all-time new highs, but you are going to hear me over the next several days. I'm going to start talking about our product, our PortfolioXpert product and our Wavetech product, because this is going to be important, especially those of you, the institutional folks that are watching, maybe old customers of mine or current customers, but more importantly, some of the folks that haven't used our product before. This is going to be essential going forward, in my opinion. You're running your own 401k, all of that stuff. And the reason why I'm telling you that is this is the cycle. We're coming out of a cycle, and you'll see the database is still acting very well, and we're still getting traction on the intermediate. So I'll go through that here in a second. So let's take a look at some of the other things. Before I get into Jackson Hole, let's talk about the economics, and I'll cover that last. But earnings coming out this week, we've got about, we'll call it 250 earnings coming out. Nothing really big coming out that I can see. NVIDIA on Wednesday, and that's after the close on Wednesday. It's obviously been a stock pretty heavily followed, and there's been a lot of volatility there. So we'll see how that trades as we come into the rest of the week. And then the only other thing I saw is a bunch of smaller retailers. Dollar General comes out. Some of those folks. I think that the retail sector is going to be continued to be monitored pretty close, and there might be some potential spikes in sentiment around that. But I think for the most part, a lot of that stuff, the Target, the Walmarts, and all that stuff are somewhat baked in and understood what's going on here from that standpoint. So let's go ahead and talk about the economics. Nothing comes out till Tuesday. We got new home sales. That's expected. Last time was at 570, looking for a lower number than that. We're just seeing a continuing collapse in the housing, and that is going to be a theme, I think, for a little while yet, and until we start to see some of the metrics turn around. I probably, if you went into YouTube and put in housing crash, it'd be 2 million videos on the housing crash. So you know that can happen. And so, but it doesn't mean it's not going to get softer. Doesn't mean there's not going to be some things to deal with there. And, you know, and I'm not going to cover lumber or anything like that. I'm considering, just so you know, from a channel viewpoint, I'm considering coming back and maybe forgetting Wednesday night video and doing a Wednesday day stream, and you can watch the replay if you're not able to watch it. But I'm considering things. I'll let you know. It was nice to have a little break here for a couple of weeks and considering quite a few things and changes to the channel, but we'll keep it pretty consistent with what you folks are used to. So let's continue on here. On Wednesday, you got durable goods expected to be up 0.8. Pending home sales, here we go again, down minus 0.4.5 is what's expected. I just said all the story you need to know there. Thursday, we're getting a revision. GDP expected to be minus 0.9, and maybe that comes in a little weaker. Maybe if that happens, listen, the Fed and Powell, they all know this. When I get into talking about the Jackson Hole symposium and the talk that Powell will be doing at 10 o'clock on Friday, they know all these metrics already. They don't calculate these 3 minutes before they're released. These numbers have already been calculated, and they know everything. The deflator is always the big thing right now with inflation. Looking at 8.7 is the deflator looking to come in. Of course, we have claims 257. I'm still thinking this is going to uptick. And one of the things I've mentioned, if you go back a couple weeks, right, you're going to the continuing claims is at 1.43, and the magic number, if you can go back and rewind to last winter, the first quarter of this year, what you're going to see is that 1.5 million continuing claims is a key number. We dropped below that. We went down to 1.3 and change. Now we're starting to increase again. If we get back over 1.5, it's possible that the employment situation will start to deteriorate over the next quarter or so. And like I said, I think it's somewhat interesting what's setting up here on the metrics and the markets. When I get into the technicals, I did a fair amount of work in the last couple of hours just going through everything, trying to get some insight into some of the things we're doing. It's basically mid-month. So as we get towards the end of the month, I'll start to set up some of the monthly metrics and things like that are be coming out. But so just hang in there for that. Probably next week is when I'll get into that. Maybe next Sunday night, I'll do a longer term thoughts as we come into the end of this month. So Friday, this is a big day. Friday PCEs coming out, expected to be at 0.1, and the core is 6.3. Last month it was 6.8. So this will lead me into Powell and Jackson Hole. So let's get into talking about that for just a couple minutes here. And I think what you're going to hear from there, I'm not sure if there's ever been a negative reaction after Jackson Hole meeting. I mean, it's a party, right? So they're having a party. All of the central planners that are going to decide what our lives are going to look like. You know, the central planning issue is becoming more and more of a social issue, in my opinion, and getting more difficult to deal with what the Fed and all of these major banks are deciding. And unfortunately, they're not independent. They're very politicized, and they've got a lot of agendas. And they got agendas and talking about everything from climate change to whatever. I mean, this is not part of the mandate last time I checked. So they're just getting into broad-based everything. And I'm sure Grandma Yellen will be hanging around as well. You know, there's going to be a lot of noise coming out of this meeting on Friday, but I think they're going to do their best to play out this inflation story that, hey, we still have it, but is starting to get under control. It's starting to cool. They want that peak inflation story to get some traction. And maybe it will. We'll see how the algos act. We'll see how market sentiment comes into play. It's going to be interesting to watch. My bias at the moment is that we will see that type of situation come into play where it's going to be, I wouldn't call it outright dovish, but it's not going to be bearish, and it's going to be neutral to probably positive when Powell goes in and talking about all the stuff that the conversations that are going on there as they're partying in the mountains. And so look for maybe a bullish surprise. Maybe the PCE numbers come in a little, maybe they're flat. That would be a bullish number maybe. I think that inflation story, while I don't think it's over, I think that inflation story is going to be played out. So let's carry this one more step further while we're talking about this. And let's talk a little bit about the September Fed meeting. And the expectations there are still for a 0.75 increase in the Fed funds rate. And I still think they're going to get to the inversion of the entire yield curve eventually. And some of the Fed presidents are talking about, well, there's no way we're not going to have to create a recession to get this inflation down. Well, you know, newsflash, there's already a recession because we've got two negative quarters. I'm going with that. I've been around these markets for 40 years. That's what I've been told. And all of a sudden, that's not the metric, and they're trying to bring in other metrics. You know the story. But the point is that this is going to be, I think, where the noise will come in. This is be where the manipulation will try to come in from the words and trying to talk the markets into a neutral to bullish stance. So I don't see this week as being a huge negative. And I'll go through the 10-year and do all the stuff I normally do. But I think this is my expectations as the week goes on. I might change my mind as things start to go, see what type of market action we get and things of that sort. So that's where I'm at right now on this whole situation. So let's go ahead and let's go to the next phase and let's talk about the Wavetech database. This is the weekly database. We're at 33.32. Last week we were at around 30%. So we saw continuing to see an increase here. And let's go over to the stats page and I'll show you exactly what's going on there. And so we got, as far as the weekly database, we got 630 buy signals. We only got about 97 sell signals. So we had a positive rotation. That's why we're up about 3%. You can see the weekly 3.2 is got a bullish ratio. And so that is a good sign, folks, from the standpoint that we're still getting some traction here. In spite of a down week, we're still seeing a lot of these symbols starting to turn into potential upside patterns that are likely to appreciate over the next 200 days. And that's literally over the next year. Those are market dates. And there's a lot of things starting to come in. If you folks know the number, if we get above 42%, then that's a big deal. Let's go ahead and take a look at the daily. And the daily actually went down a bit. We're down to 80.47. As far as the buy sells go, we had 2,276 sell signals for Monday's opening, 169 buy signals. And I think this is important to talk about here is really what we're looking at is a kind of a rotation that happens. I talked a little bit about this before I left. I talked a little bit about it when I did the video the other night. And really what we're seeing here is that rotation. As long as we stay up around 68, it could get as low as 62, because a lot of these short-term symbols have really done quite well. So you're seeing a little backfilling there, and that's likely to keep bullish as long as we stay over 62, 68%. That's typically what we'll get. And if we go through this week and we see it, it's going to most likely hold well over 72% this week, is my expectation. We may see some more selling. We're a little bit negative on the futures right now, but I think what we'll see here is further rotation happen in the database, and then we'll start to see it get some traction again and start to go up. But the main thing that I want to point out is we're not at a key level here on the weekly database. So there, we have 16,100 symbols in the database right now that are active, and this number changes quite a bit. But the main thing to know here is that we've got to get over 42% on the intermediate. If we do that, then that's going to give us some more traction, and I think there's more upside than most people would argue. I know there's some perma bulls and people out there that are always bullish because they're buy and hold people, pie chart traders, all that kind of stuff. A lot of asset allocators are always bullish. That's all they do. They just hold, buy and hold, and do 60-40 strategies, some real basic stuff. But when you're trying to add alpha to things, you want to be much more dynamic in how you rotate your assets. So that's a key element. Okay, let's get into the S&P. I remember the other day, I don't know if it was Friday or something, and I was on an airplane on an internet connection tweeting to you folks. So, and watching, it's amazing technology. I was able to log into my computers off of my phone at 38,000 feet. And so it was pretty amazing. But what we're seeing here is we're getting very close to the, second. We're getting very close to the 21 period moving average. And I want you to look at the PPM 2 is at 0.29. So those of you that have the indicators, which is quite a few of you now, look for a move back above the first and second derivative over the next couple of days. I'll be talking about that. But we're at 0.17 on PPM 1, PPM 2 is 0.29 and 0.18. So this 0.29 tells us that there's only a 40% probability to trade below that level. So let's talk about what that level is. Right now it's 4160. I've already checked this number out. It's going up 12 handles per day. So literally in the next 2 days, it'll be around 78. And then the next day it's going to be right there at 42. So that'd be 4178 is probably where the prices are likely to meet. There may be a slight more downside after today, but I'm going to show you something here. We may have already printed, this is going to be quite the statement, we may have already printed the low for the week. And I'll show you, 4202 is a number that comes up. If we just look at the market grid here, S2, 4204, so we've already printed 0625. So it's possible we're going to get an S2 R1, that's 4244 is R1. We could get a little more volatility. I don't think so, just based on what's going on from a news standpoint. I think we won't see much going on until Tuesday and Wednesday. We'll probably just trade in some zones here and trade within the market grid. So that is very likely that we're going to see a bounce off of these levels. Now, I'm going to show you on a weekly chart, which I believe is very significant here is we go to the weekly patterns. And by the way, we have a weekly signal, long signal, and a daily signal on the S&P, on the futures. And I think this is going to continue. I want you to look at PPM1 here on the weekly. It is absolutely vertical. It's 1.35. We're still negative on PPM2, 0.38, 0.27. But what happens in this type of configuration, we're above the first and second derivatives on PPM1 and 2. So what's going to happen, it won't happen this week, but we should see both of those PPM 2 and 3 turn up next week and start to work toward getting to a positive tone. If that happens, then we're going to rotate out of this pattern into a higher zone. The 40 period moving average right now is at 42.81. That's very similar to the 200-day moving average. I'm going to go back to the daily chart just to bring that up for a second here. The 200-day right now, the 200-day right now is 43.12. So we're still seeing on the daily it's a little higher. So 42. Go back to the weekly. So 42.80 to 43.20 is still going to be a resistance zone. I think we're going to want to get up above there, and I still think we have a shot at challenging some of these upper levels. If we look at the Fibonacci targets that are coming in here, we're looking at the potential for 34.89 is the minimum fib target. So that's that 30. I'm sorry, I've got the wrong number here. Bear with me one second. That's the low targets. 43.82, that's the number I wanted. 42.82 is the number that is targeted. So that 43.20, 43.80 comes from that number. Above that level, 4,500 comes into play very quickly. So this is going to be a very critical point. I don't think we've hit the high just yet. I still think there could be some downside into this maybe 41.90, we're going to call it on the downside. 49.90 to 42.02 is going to be it. If you look at the numbers here, S2, let me get over to the right number here. S1 is 42.02 on a weekly. So we printed already an S1. And what I'm thinking here is we're going to get an S1 R2, which would be a 42.02, 42.93. And if we got to R3, that's the retest of the high at 43.27. So I still have a bias to the upside. It's really kind of tough to get bearish when I see PPM1 just accelerating like this. And what that means is that the 10 period moving average is at 40.90. 40.48, it's not in play right now, but that trend is so strong. If it dips down too much, everything you can see negative probably under 41.80 is going to be a bargain as we go through this week, is what I'm thinking here. And the configuration confirms this across the board. Let's just stick with this weekly chart here, and I'm going to the NASDAQ now. NASDAQ's down half a point right now, 0.52, down 69, 13,200. I thought we would get about to the 14,000 level in this run. We came a little short at 13,740. I still think there is, like I said, another run at these highs. The fib targets up above here are minimum is 14,283, 14,800 would be these targets up in this zone here. Same thing with the S&P. This is weekly. The same thing here. We've got this absolutely vertical PPM1. This is not what it looks like when the market's about to collapse to the downside. This is not the setup here at all. And you can see, I'm just moving my cursor over on the page here. You can see where I've got the cursor. This was a peak value in ppm, but this goes into that trend mode. If you've seen, I've been around the channel for a while, where you set these ppms up and they go into a trend maintenance mode. This is first phase of this on a weekly basis. So there's potentially some big stuff. We don't have the confirmation on ppm 2 and 3 yet, but like I said, it looks to me that they're going to want to rotate up, and this is across the board with all of these indexes that I'm covering tonight. It is what it is, folks. You know, there's just no way to come up with any kind of bearish tone looking at this thing. It's just impossible. In fact, this is the buy signal that came in a couple of weeks ago. We got a buy on the NASDAQ at 12,981. Maybe it's going to come back and retest that entry point, but it looks to me that we're going to get a potential of something a little larger, at least into these fib targets that I just talked about. Sticking with the weekly charts here as we go through the Russell as well. Same scenario, got a buy a couple weeks ago, 1870 was the buy. We're 1957 here. We're trading right into that 40-week moving average, which is somewhat equal to where the 200-day is. That's at 1982. Last trade, this is the cash, so the last trade on Friday was 1967. Let me go over to the RTY so we can get a current value here. And you can see all of these indicators look the same. ppm1 is just vertical, 1.57. So these are very big numbers, and they don't bleed off. And this is something that I need to point out. And those of you who already have the indicators for TradingView, you're going to know what I'm telling you here is you'll see, especially on a weekly level like this, the momentum just doesn't bleed off very quickly. This is substantial when you see these kind of numbers. And that's why I'm sticking with this overall pattern still continuing. Whether it actually ends up making a new high from what we printed on these indexes going back, last 2 weeks, we'll see. But everything is pointing to the probabilities are saying that this will happen, and we'll at least get up to these fib targets on all of these indexes. And let me just see something here. I think I have, let me put this chart up over here. We haven't looked at this for a while, so let me bring this up and go full screen.
Order filled. Order filled.
Those are, sorry about that. Okay, so here I have the IWM. Let's look over here, the S&P versus NASDAQ. You can see how the relative strength on balance on all these indexes are still trying to outperform the NASDAQ. And I think we're going to see a continuation where maybe the Russell comes back into rotation again. We'll see how things play out from that standpoint.
Order filled.
Okay, so now we'll go to the 10-year, and this is an important market to look at here, especially because of what's going on with Jackson Hole and everything that we're expecting here. We still have very negative ppm1, which is right at where we are right now at the. Let me bring that on screen for you. ppm1 2.93, so we were able to just finish above, right at that level, 2.98. And I think there's going to be some resistance. If we look at the market grid for coming in, 3.05 is probably going to be the top end of this market. 2.85 is probably the range, maybe 2.92, S1, S2, looking for maybe R1, S1, possibility. This is on a weekly basis again, R1, S2. And let's go over to the dailies just for a second here to get a feel for what this looks like. Now we've seen a pretty decent increase in the PPMs over the past several days, and we're starting to see a positive movement here, plus 0.53, plus 0.14, and PPM 3 still negative. But if you look at the configuration here on the PPMs, they're telling us that there's still some upside, but we do have some fib targets above here. And let me bring that up just so you can see it. It's on this pop-up on the screen. Let me get over to it. It's 3.06, so that lines up with the expectations for the weekly as well. So about 3.05 is probably going to be the top end here. That's fib target 3 here on 3.06 to be exact, and we're trading right into fib target 2 already on the daily. But the PPMs are still positive. PPM 2 is turning up, but we're not in trend mode here at all. So I would expect to see that 10-week moving average, all that set up a pretty decent pattern on the upside. So, as far as halting the upside, just bring up the yield curve. I'm telling you, it's like everything got frozen. We continue to be the 530s that I watch. Everything, in my opinion, still gets to be good. The headline story is the 210s have never been this much inverted and all of that. And maybe it means something, but I doubt it. I think it's just more of an aberration that's going on within the system right now. But I think I'll go through a yield curve analysis maybe as we come into the end of the week or something like that. We'll see how it sets up. But I still think we're going to see an inversion across the board, but it's not yet at the moment. And I'll go through that analysis later in the pattern. All right, we'll cover the Dow tonight, and it's continuing to move up pretty good. We're back at 108. We saw a nice pattern start to emerge here. We got on the market grid, I call this a bubble bottom. It's a little rounded bottom that happens on the market grid, and we get that's typically a low, and that happened on the 11th. So that was last Thursday, a week ago. Yeah, on the 11th. And so we're still seeing this pattern start to accelerate. PPM 1 is at a 0.17 point. We're not in trend mode, so we could stall in here, but we did get a buy signal on the Dow, and there are some laying out there. There's some Fibonacci targets, 108.81, which we basically are already satisfied, and then 110.25, 111 from that standpoint. And like I said, as we go through the week, I'll be watching the Dow, and maybe we'll go through some of the other elements, looking at the Japanese yen and some other currencies. Looking at the weekly, this is the objective that has been around for a while, and I'll bring this up on screen so you can see it. This is the weekly Dow, and the target on the upside right now, high target 111. That matches with the daily. That the extreme on the daily is 111 and change. 111.68, 115, 118. So it does look to me that there's still some potential here to the upside, but we're in trend mode across the board here on the weekly on the Dow. We've actually just fell out of it for a brief moment, and there's continuing to be some upside here. So whether that ultimately plays into some higher yields above 305 that I just talked about, we'll have to see what drives this. And especially as we come through the week, I'll be able to get a better analysis as we see some of this. So I may jump back and cover the Dow sometime in the next several days. Okay, next we'll go through the crude oil, and crude continues just to soften a bit, and we're hanging right on that 40 period moving average. 88.36, 89.15 was the low. This is the weekly so far this week, which is tonight, right? But that slope is still positive enough. We're looking at ppm 3 at a 0.75, so that's going to be a substantial amount of support. I talked about this over the last couple of weeks before I left, that was going to be your support line. Right now it should continue. I think we get sandwiched between the 40 and the 10, which tells us we'll call it 88. We'll round the numbers to 96 is going to be the range. And we're seeing the ppm starting to turn up. So it looks to me that, crude is just got a limited downside, and 85 is max, but we're probably already seeing the lows here at this 86 level. I just don't see us being able to sustain underneath that number right now, no matter what happens. I believe the demand is still very, very strong, and we'll continue to watch this just hover right along this line and get sandwiched between these two levels. Just sticking with the weekly charts here tonight, not getting into the micro stuff. I'll get into that more as we go through the week. But here we are, gold back at the 200-week moving average, 1716. We've got a low of 1758, so we're just kind of hovering just above there. PPM-wise, on a weekly basis, there's really not anything exciting here. In fact, we're still in a major downtrend here, minus 0.54, minus 0.48, and 0.16. So we're still got a ton of overhead resistance now at 1780. And that's going to be your major resistance overhead. It doesn't look like there's a very high probability to get above that. The only positive that's happening is that the ppm is trying to turn up, but this is weekly, so you get nothing until next week. So probably 1780. If we look at the market grid for this week, 1773 is R1, R2 1786 is probably in the range of where this market will be topping out. S1 51, we're already traded 58, so maybe look at S2 would be down to 1739. Just no reason to own this, especially with the analysis that I just did on the Dow. This is just a terrible place to be right now. And it's interesting. I thought I ran across, I think on Twitter, some gold bug guy, I don't know who he is, just going on, and all the reasons to own gold and all the central banks, the same old story. The unfortunate part, whether it's being manipulated, there's a ton of sellers out there, and they keep the pressure on this market. So anytime we've seen a rally over the past really couple months, they just get met with a ton of selling. So whoever's selling this stuff, or whatever kind of rotation is going on with assets, it is not over here on gold yet. So there's no way for us to get any positive rotation at the moment. The only thing, like I will point out, like I said, is the ppm 1 and 2. It's trying to turn up ppm 3, but we're looking at least 3 to 4 weeks to be able to get to that level. Yeah, just sticking with the weekly charts here tonight, we did see a pretty decent reversal on Bitcoin. I remember talking about this 24,000 level. We did get just above there. We got the 24,978 in the last week. This chart updates tonight. And we didn't, this 21 period moving average, all the PPMs are huge downtrends. Minus 1.84, minus 4.07 on PPM2. So nowhere to go here. Only positive is that we're getting first and second derivative taken out on PPM1, but we're back under the 10 period moving average, which is 21,686, low 20,930, last trade 21,402. So look for some continued pressure. It'll be interesting when we come in tomorrow night to see, when we get the new week to come on, what happens with these PPMs, whether PPM1 is going to turn down or not. My guess is it's probably not going to. I think we'll see some stability in PPM1. PPM2 is still under a lot of pressure, and that's going to be your primary trend line to watch for. That's way up at 28.7, and it's dropping about $1,200 per week. So there's no way we're getting above those levels at this time. Okay, folks, this is going to do it for tonight's video. Haven't looked at any of your comments, but remember, 1,000 likes or no video. So if you're watching this, make sure you do that. I really would like to see this channel get some real traction here, folks. And I know a lot of you are very faithful, appreciate everything, but just hit the like button. It's free. It helps me a lot, and that's something I would like to see this channel grow. I'd like to get to 50, 100,000. I want that little silver platter, so I've got to get 100. So let's start telling our friends and getting that going. Remember also that we've got the indicators out there, so make sure you take a look at that. Go to the Kendall Report /indicators and check out that. And we've got we also have a course now that's coming out, and those of you already got it, just so you know, that I am putting together some advanced PPM stuff. There's a couple new videos come out, so comment, make sure we know what you're looking to understand more, so I can make those videos. That's the plan going forward. So anyway, folks, thanks for watching. It's great being back, and looking forward to our weeks going forward in trading. So have a great evening. Have a good day trading tomorrow, and I'll see you tomorrow night. Thanks a lot. Hey Jeff, there'll be 6,000 watchers by the time morning comes. So it's all good. Anyway, folks, have a great evening. Glad to be back.